In the midst of a housing crisis, there are a lot of homes for sale in Toronto, but it doesn't seem like the buyers are biting just yet. Data from May indicates that almost 8,200 condos were for sale in the GTA. And that's the highest since October of 2020. So do we have a saturated condo market? Let's bring in John Pasalis, president and broker of Realosophy Realty. It's great to see you.
Thanks for having me.
Is there a flood of condos on the market? Will we see price cutting?
Well, we're definitely seeing a surge in inventory right now. And a lot of this is driven by investors who are just wanting to exit the market. Any investor who bought recently, who's renewing at today's rates, the numbers are a lot more challenging. They're paying higher mortgage payments. Rents are declining. So we're just seeing more investors wanting to exit the market right now.
You're quoted as saying Toronto's housing market prioritized micro-sized condos.
Yeah.
For 2 decades.
Exactly.
I always wondered about that. What kind of legacy were we leaving for the city in terms of housing?
I mean, it's not a great one, unfortunately. I mean, certainly this is a product of a government that's just decided to get out of housing. You know, back in the 90s, the federal government decided to not prioritize housing, allowed the free market to do whatever it wanted to do. And that sort of the rental supply was filled by smaller units dominated by mom and pop investors rather than permanent rental housing. So I don't think it's a great trend, and I think we're going to start to see some of the side effects of having a market that's dominated by small investors.
Some of these people are finding it hard to carry their debt with higher variable rates, for example.
Yeah, exactly. So many of these investors are over leveraged, you know, so they're feeling that the costs a little bit more significantly, say, than an institutional investor would. So, you know, of course, one of the things they do when things are too high and they're strained financially, they just want to unload their properties. And that's why we're seeing a real big surge in listings in condos, but not so much in the low-rise housing market for semis or detached. That volume's a little bit more normal.
We're not seeing a bunch of stuff put up
exactly.
for sale. Yeah. Now, the Toronto Star says the average price for a resale condo in downtown Toronto is about $1,000 per square foot, whereas pre-sale condo units are going at about $1,500. So you might say, well, why would I want to buy into a pre-sale and wait years and deal with possible delays and cost overruns?
Well, exactly. And I think that's one of the challenge. I mean, investors were paying it largely because they saw it as effectively a free, like a lottery ticket that was guaranteed to pay it out. They expected to see significant gains by buying pre-construction condos. The challenge we're seeing right now, of course, is that the people who bought 4 or 5 years ago, their units are completing today, and they're not even worth what they paid for them.
Ooh.
Because the pre-construction condo market requires resale prices to surge. But what we're seeing in the market in Toronto, prices today for an existing condo are basically the same as they were 4 years ago. So that is, of course, putting a squeeze on these investors who paid really high premiums for their units 4 years ago.
In some cases, could people just walk away and forego the money they put down?
You know, they're still liable, so they could walk away and lose their deposits, but they're still responsible. They still sign an obligation for that contract, so technically the builder can go after them if they have to sell that unit for less than what they paid.
So obviously there's quite a long lead time with these things, but developers now, are they planning new condo projects, or are they just saying, oh, I'm going to hold off?
Well, the challenge is that developers have condo projects ready to launch, but no one's buying them because investors are looking at what's going on in the resale market, which is not great. Prices are flat, rents are declining. The gap between pre-construction and resale is significant, and it seems like a bigger risk. So this is why we're going to likely see much fewer condo starts in the future, because we're not seeing very many pre-construction condo sales right now.
What about you, though? I think we're not going to see a price plunge in the near term.
You know, it's hard to say how the market's going to react. Right now, the prices have been steady. And even though many of these investors are strained, probably, it's more about sort of servicing their debt. Many of them have equity in their units, and that's probably why they're hanging on and not lowering their prices. So right now, we're seeing some stability in prices. But It depends on what inventory looks like over the next 3-4 months. If we see another 2,000-3,000 units at the market, you might get some people just deciding to slash their prices to move on.
Well, these shoe boxes in the sky, you hear them called. I mean, some of them are 500 square feet, pretty tight. Is it possible technically to take two of them and break down the wall between two of them and make a bigger unit? I know you'd end up with two kitchens.
Yeah, the challenge is, I mean, it may be possible for some buildings. Most people don't do that. Again, one of the challenges is the price is so high for some of these units per square foot.
Right.
It's actually just cheaper to buy a house. And this is one of the reasons why we're not building a lot of family-sized condominiums. It's the price that the per square foot that builders are charging. It's just not economical. It's actually cheaper to buy a semi-detached home than it is to buy a family-sized condominium.
Right. I mean, that's been the driver, a big driver of the Toronto economy for decades, this condo construction.
It has been, and I think that's one of the concerns, that now we're seeing this slowdown in pre-construction sales. That's going to lead to a slowdown in starts, which is, of course, going to impact our housing market 3-4 years down the road as we start to see less supply get completed.
I've heard concerns expressed that some of these condo buildings could deteriorate if they turn into just rental units, and the rents come down and the landlords can't afford to service them or can't afford to do maintenance. Is there a risk? I don't want to say slums, that's obviously exaggerated, but is there a risk we'll see declining standards in some of these buildings that are rented out in large measure?
I don't think it's a material risk. I think people have been saying that, for example, about City Place, which is a neighborhood right around the Skydome Rogers Center.
Oh, yeah.
And those units went up years ago, or more than like 15 plus years ago. People were concerned that those would become, the next, poorly maintained units, but that's not necessarily the case. So there are a lot of, I don't think those are material concerns in the condo market right now.
John, thanks.